Hi everyone. Today is October 21st. We'll start with Bitcoin as usual. Now, starting with a low time frame, 6 hours time frame. Um, Probably everybody would be happy, I believe, because the way the market is improving, not just Bitcoin, but all of the coins. So I believe that now there is positive emotion um, in everyone's mind right now. And why not? Yeah, because it wasn't easy. So everyone, I would say, and everyone, I mean, congratulations to everyone in a way that those who were able to held up, it wasn't easy. Not at all. Even for seasoned TA, experienced TA, it wasn't easy. Um, I don't want to, I don't want to share my pain, in terms of the challenge been in terms of challenge doing this TA with the kind of price action and so many
Recording in progress.
uh hold on, I'll just mute everyone. It wasn't easy. So I can understand the situation from the traders sides and all those who are interested in a long term. So anyways, things are improving. So that's a really good news. And more importantly, I would say it is following technicals. So that's what we always check on a weekly basis, that how it is performing. Is it following technical levels or not? And so far so good, because there is no surprise in terms of price action. As I always mention, there is disappointment, but there is no surprise as far as the direction is concerned. And so that's what matters, because whether it will go up or down, nobody knows, because if even TA doesn't know, but what TA knows is the what level it will react to it, and what level is critical in terms of opportunity and in terms of risk. So that's the scope of technical analysis, which all I always remind, because somebody should not be thinking technical analysis is like fortune telling. And anyone who is trying to sell that kind of service, I don't think there is honesty in it. So here we try to assess what are the key levels where the price could react, and if the trend is up or not on different time frame, because this is another thing people miss out. Whether it's a bull or bear, it is subjective. It is subjective to the time frame you select. This concept is not known to many, and this is very important. Like right now, I'm sitting outside, and it is fall season. It is cold, but if there is nice sunny day, it would feel like a summer. Or if it is very cold, it might feel like winter. So when you assess, so if I'm this is fall season, little bit of cold, um but if it is cloudy, it is very cold, then I cannot assume it's winter. So like that, if this is like a dip, right? So dip in temperature, we cannot assume that's a winter, like a bear market. You see my point? So like seasons and weather, the temperature is not consistent even throughout the day. So point is, the day has its own cycle, right? The temperature doesn't remain the same most part of the world. I'm not saying Antarctica or some extreme region, but rest of the region, right? The temperature is not the same during the day. Temperature is not the same during the month, and temperature is not. So basically, we have cycles in season. Only difference is the cycles in seasons are defined in terms of time duration. It's fixed, more or less fixed. We know that. that what month the winter will begin, what month the summer will begin. More or less, few days here and there, but more or less it's the same because it is defined by the rotation and all that we know. But in the crypto or any kind of assets we talk about, the cycles are not at the fixed duration, right? So if we talk about the cycle, so that's why people try to say there is a few because few years of cycles. So for an example, if you study S&P, like Standards and Poor S&P 500, US in stock index, then you will see major cycles like mega cycles which started from 1942, then 1977, and then 2008, and then the cycle that is currently going on. So there are around 33 years of cycles if you track at 1 year time frame. But because there were 33 years of cycles, two cycles like 42 to 77, 76, 77, and then 2008, and then and so on. We cannot say that the next cycle is going to be 33 years or so. Mm, But in crypto, the challenge is very different because it's relatively new, especially like even Bitcoin, 2009, it was not in an exchange even. So you can say 2013, 12, like there, so I mean, very little exposure. So there are no major cycles, though we have defined few cycles in crypto, but those are not major cycles to be honest. Why? Because the Bitcoin started after financial crisis of 2008 and 9. So if you ask me, this is the first major cycle actually. There's no so I'll just digress a bit to make my point. Now people think that so definitely we have to divide and create some cycles, but if you tied up this chart, this is BTC chart, right? Starting from 2010, uh, then this is whole entire one cycle actually, because this began after financial cycle where the stock cycle started. You know what I'm saying? So and at least this group is aware that Bitcoin is not alone. It's not moving. Yeah, when it was here, it was limited to few people. The price action was limited to only few people. But now, because after CME, the futures, right, in the US started, the cycle is more or less, or price action is more or less aligned with a broader market, not just stock market, a broader market like interest rates and all that, especially. But anyway, so the point is now Bitcoin or crypto in general are tied up with macro factors, macro financial factors, macroeconomical factors beyond crypto. In fact, the crypto factors are always short term. For an example, there can be some news and the price may go up for a few days, but it doesn't create any multi-week cycle or multi-month cycle. You know what I'm saying? So that's my point. So just I wanted to recap this because uh I think from education point of view also, or whatever opinion I have about the cycles, I thought maybe I'll cover that in today's session. It was not something I planned, but just came to my mind. So I'm spending few minutes, and then we'll definitely go into details of price action. So and then so basically this is the only one way or cycle from a macroeconomical or micro financial point of view, in my point of view. And then you can dissect into first one, second one, and the third one. Now I used to say this is the fourth one, and this is going to be the fifth one, but I have changed my opinion a bit because to me this is not this is long. I mean, but I believe that I would like to consider this as fourth cycle. So this is the first, second, third, and then the fourth cycle where This is one shorter bear market, and this is another one. Um, Simply because I think if you look at this downside move compared to this one, I mean, it's 50-50 kind of. So it's not huge. So if I consider starting from here, start and then ends here, and then we can say this one is the first major dip. This is a minor dip from a big picture point of view. And then it's resuming. Yeah. So yeah, anyway. So we can consider fifth cycle not a problem. One, two, three, and then whole entire thing is four, and then five. Why I was reluctant on calling this as fifth, but more of a continuation of four, because the this trend is still um, we'll look into the monthly chart, not on this one. I don't have the drawing because of the trend lines. Anyways, so that's about the cycles. And yeah, um, yeah, so it looks like this is the trajectory I had earlier, but now it looks like this is the trajectory. Right. Anyway, all positive so far. Let's go back. Let's go back to 6 hour intraday. So that was about cycles. So we are now witnessing a potential new cycle from here on. Okay, so this was the first achievement, this was the second achievement, okay, and this was the third achievement. You see now, and now we can say that this is the fourth achievement. Why not? Oops, there's always a case. I don't know what happens with the trading view. It sticks. This is the fourth one. You see now. Last week I mentioned focus on this. Don't focus on the moves in between. I hope it makes sense now when you look at this one. So this eyes, now this goes away. We don't need it, right? Also, we don't need this. We wanted to watch out. So we wanted to watch out here and it dipped. And when it was here, we wanted to watch out here and it bounced. So we don't need now. Makes sense. So we have to little adjust like this. Not much. It's in this range right now. Yeah, it's in this range currently. So this was the first, I think this was on the news, ETF approval. But even though there is no approval now, it has returned back to that level, which is amazing on 6 hour. So 6 hour, I think we have clarity. We don't need all these drawings now, I believe. Okay. So we can see that it's approaching what? Approaching what we wanted. So on a 1 day chart, let's look at 1 day chart. So this downtrend line is retested, right? This is what I mentioned last week. So this worked very well. You see the progress? I don't say, some people believe that or expect that I would say be patient, or don't worry, it's all right. I'm not going to say all this because this is everybody's grown up, everybody's intelligent, everybody's smart here. So these statements are for kids, and I have no business to say this. You can say only if you know the futures. I mean, I don't know the future, but I know the key levels. So I won't say, don't worry, it will be all right. have patience. It's not my business. It will be totally wrong if I say so. I would rather say, if this is a support, you watch out for that support. And if this is a critical support, you have to pay attention even more. These are interim support. Even if it breaks, it doesn't harm, right? But what is not, what was the important one? This critical support was important, and this was the ultimate support, last support I mentioned. Now you interpret that if it is not broken, how you should feel, because I should not be telling how you should feel, right? It's not my um it's not my responsibility, because everybody is smart, as I said. So um just a clarification, I'm not going to say that it's in a way it no need to worry, and that kind of statement will never come, because it's not needed. We have we have identified these levels, and then, as I said, the way one I visualize is this is a ladder or stair, and these are steps. If it is able to close about these steps, I'm calling it step. This is a key level, right? But you visualize this is a stair. Used this is like first step, second, third, fourth, fifth, and so on. We'll keep adding, right? Now you have to decide what to do on what, because closing about this is positive. Remember, see here it tried but didn't close, right? Here it closed, so that's positive. Now, hypothetically, let's say it goes down. So in this area, why anyone would be worried? Because this is not broken. Okay, if this is broken, then that means it lost this particular gain or step. It has retraced. Now you have to ask yourself that what step where I should jump off. You know what I'm saying? What step below I should jump off? It's a personal decision based on individual's entry level and risk appetite. So it's so easy that everybody should have a plan that I'm going to add more money when price closes above this level, and you decide how much money and all. You can always ask about best practices to me, which I shared anyways. I don't want to bombard again. And the similar thing, when it starts going down, when to reduce by what is important. So these are 2 points I keep repeating because this is where people miss out. So thank you for being patient about it, because if this is understood, then life trading is easy, very easy, because you need two things. One thing is the knowledge of levels, and second is uh, the the planning based on best practices. Not just planning but execution as well, because as I said earlier, you may plan but you may not be able to click it, buy sell, because it's tough. The execution of plan is more important. You may decide that I'll exit if this is broken, but then emotion kicks in, hope comes in, and then say, oh, it's just a, I'll stay. And something like opposite, like if it breaks above certain level, then say, oh, let me put all in, and more money, and uh, excitement that, oh, it cannot go down, and all that assumptions. So assumptions, hope, and all this emotional state, basically anything that is not in present, doesn't help. So it's very, very counterintuitive that everybody talks about that the TA. I'm using TA, so I know the future. So I would know about the future, and I am saying something opposite, that TA is all about knowing the present. It's so counterintuitive, you may not believe it, but if I explain, and I have explained many times, that it is about understanding the price with respect to the level where it stands. The levels can be futuristics, remember. The levels can be futuristics like this one. This hasn't happened, so this is futuristic, but the price and the recent trend, that's what matter, and that's the TA, in fact. So people mix up that I'm talking about, or TAs talk about price in the future. No, the TA should be talking about levels in the futures. And then when the price meets those level, you can say, okay, I got this milestone. I got this step in this staircase. You know what? This is how one should think. And that's very rational and I would say pragmatic approach rather than someone who is dreaming about certain levels. So the price is the truth, I always say, because the market determine what should be the price of certain asset. And the price is always in the present, whether it's based on speculation or reality doesn't matter. Whether it's a fake or real, it doesn't matter. Whatever is the price you see on screen is the reality. Okay, because you don't care if the price goes up based on speculation, you don't care because the objective is to make money. No, so it's like that. Anyway, so I first of all, we can see that one day is improving. Why I'm saying improving? Because it was here, then touched this level. Now you can see that almost 70% um, loss is recovered because it's sitting here, right? And this was a major drop. So the August month, the all this loss is recovered fully. It took a while. Drops are always fast, more in most of the cases, and the recovery is slower, but it has done it. So first of all, there is absolutely no risk on the downside. That's what we can say. Now, this is half of the battle. The another half of the battle is when it crosses the required level. Remember this 31,500 or maybe 32K. Let's keep 32K in mind. I'm maybe I'll change it to 32K. Just make sure that it crosses, not tweaking much, little bit of tweak. So I want to make sure that it closes above. That's the only reason. Yeah, not major change I'm making here. So it is definitely making progress as we can see, and then this was point of rejections. This is a zone. This is a major rejection zone. And as I explained, this zone is no ordinary zone. Let's zoom out in another layout to understand why this was not an ordinary zone, because it's not about this segment. It goes far. Uh, this goes in past as well. So we'll look into that. But I think this 6 hour and one day that we have seen, this is enough and good enough to understand what is happening. Let's look at weekly now. So weekly, as you could see, in this one, if I may draw, you see this level, I believe this is, yeah, you see now why this is important. Make it bolder. So it's why, so this level, as I mentioned, it is not about this segment, this particular wave. So these were the two attempts we can see, right? But it was this, there was an attempt here as well. When it was going down, it actually tried to recover. As you could see, There were actually two attempts for 2 weeks, first attempt and second week. So it wanted to recover from here as well, but it failed. See, this was the first leg down from the all-time high. Then this was the second. While it was going down, there was a major attempt, recovery attempt of this 25K, but it failed from the same level. Not only that, there were major attempts, the breakdown attempts, and this level defended for so many weeks, as you could see, right? This was really a major first downside move, but it was defended. Then there was another leg up, and then you can see this is a huge consolidation also on top of it. So now you, at least you, not only that, over here as well, actually it defended. So you can see the whole entire top was created on this base, you can say. So naturally, you will at least acknowledge, whether you like it or not, that this wasn't easy. Once it was broken, you cannot assume that this was so easy. No one should assume that. So it took a while for it to break. It is going to. And one should understand that this was a major attempt. It went down, but it didn't go down all the way where it would take this low or this consolidation zone. Then there was a major attempt. It went down, but it didn't break below this one. And now you see this. You see the big picture now. This big picture at least tell you that nothing has gone wrong so far, right? And to me, the longer this consolidation, the stronger the next move will become. Trust me, based on technical analysis, not on me. When I say me, means myself. Based on statistical data, when you see this kind of a pattern, that means the breakout from here, of course, will have breakout and retest of this level, but ultimately this is for 40K plus. This is for 40K plus. Technically speaking, right? Yeah. So now, basically, the orange dotted line, which is nothing but this level of rejection now, it has to be broken above, which now we are saying 32K. Yeah. So last time we had discussed this one. Remove this drawing. I don't need this one because the bigger picture is working. Maybe I'll just adjust the slope. You see the slope because of beautiful weekly candle. This now the slope is this. So this is more like perfect symmetrical W, in fact, and looks good. So here it might retrace a bit. Don't worry about it. See, it might retrace from here, or it may go all the way up, all the way up like this, 32, 33K, and then retrace. Maybe this is what it might do, and people might get surprised that why it is retracing. But I think this is what I foresee. It might go up a little bit, spend some time, goes all the way 32, and then retraces back. The retracement could be like up to 30K, 29K again, potentially. Depends. If it is too strong, it might not come all the way down. It might stay in this zone and then shoot up like anything, right? So this zone 32K zone is very important. I believe that once it breaks above 34K, that's what we'll see the power, right? We That's what we'll see, because after that it doesn't have resistance, no major resistance, uh, um, until it reaches to 40K range. And this particular consolidation should have enough ammunition for it to push that. And this is the line that I was talking about when I was explaining the cycles. That if it goes up, let's say, then one may say this is the fifth cycle, but I believe that this is continuation of fourth cycle because of this, which was not visible on the monthly. I'm not just calling this as end of the fourth cycle. I'm just calling this is continuation of fourth cycle because it actually this trend line is maintained. Maybe when we have more time in future, I'll explain more on this one. But this is the quick explanation that this is the first downside move, and this is the second one, and now it's kind of continuing. So I'm tend to think that this is continuation of fourth cycle which has two downside moves so far. So in terms of visualization, um, this this is how I'm depicting. So I'm considering this as fourth cycle only. This chart doesn't have all the cycles like BLX. So on BLX, yeah, the old. I don't need this. We remove all this. This was probably research work, very old. Over here as well, I had this level long back. I don't know when, but long back. Yeah. So and this arch is important. This yellow arch that is important. So that's why I have this one. So if this is the angle, let's say, if this is the angle, we don't know the angle mean average because what happens is the average cannot be found unless you see the next correction. Like for example, it moves up. So this is the angle, but then goes down, the angle changes. So if you want to find out the angle of this wave, then you will draw like this. So this is 45 degree, you see. But when you draw this, then it's 72 degree. But on an average, it's 45-degree angle. So now the mean angle for this one could be 33 degree, potentially, like this. So in a way, this should meet somewhere here, like Q3, Q4 of next year, based on this trajectory. Because what is happening is the cycles are getting shorter, I would say slower. You see, this is near vertical move. Then so maybe I should explain in terms of angle. 66-degree angle. You see, this is near vertical, near 90 degrees, see 81 degree, and then this is 49, 50 degree, let's say, and now this is likely to be the 33 per 30. So you see the slope of the cycles is reducing, and the cycles have become longer, so shorter and longer. You see, this is the shortest cycle. Then this is little longer, but then this is you I think you got my point, right? This is near vertical, then the angle change, and you see the slope is changing, and because of this, when you connect the tops, you see the arch, you get the arch, and that's why my bad. I think I should stop myself. This was like far-fetched one. I think for now I'll just keep the white line. Yeah, but you get the point, I believe that. But feel free to ask me if you are interested more. So I would say, if you considering the yellow arch and considering the angle of this wave, considering the timeline in mind, uh looks like this is how it may progress. You don't know. I mean, nobody knows that if it goes wild and ETF is approved, or any factor, positive factor could change the angle. So it's very difficult. But I think from understanding point of view, that from a mega cycle point of view. See, this is the guideline, this is the limit, and we have to see how it goes. If it goes up like this, it may cover shorter in shorter time. But still, this yellow arch is super important in my point of view, because that's indicating the angle or slope of this wave. Yeah, in fact, you can draw another one on the bottom, like this. You might have seen this. Somebody might have done it. This is what is happening. I believe that you, yeah, maybe I should have different color. Mhm. So this is the basically boundary from a entire price action point of view, not just one cycle, but entire price action starting from 2010, right? Like, yeah, I believe you get the big picture in mind as well in terms of cycles. So today I focus on cycles and then the usual 6 hour, 1 day, 1 week chart. But every week I try to cover something. So this time I focus on cycles. I hope you found helpful. If you want more information, I'll try to answer your question. But I believe that this should cover the basics. Mm. And there is no need to speculate what after this. I mean, that's too much. Then it's everyone's guess, I believe. Then it's guesswork. There's no meaning. It will just, mind will like it, but there is no real clarity, if you ask me. So let's look at our reference data, right? Oh, my bad. We always look at the third layout, which is this one. So this is very faint, so we should remove it now because we were focusing on this one, and you see it's following. And I've been saying this, it is in the green zone, and it is, that's why there is no risk. Very simple explanation. This chart is, you sometimes, TA try to use fancy drawings, fancy indicators, and so many, complicated, you and my experience is, when you have more clarity, your chart becomes simple. In fact, sometimes I had to draw some drawings. Otherwise, people say this guy is taking money and not drawing enough. To be honest, don't laugh at me. But sometimes I add lines, but to me, one line or two line is enough. Yeah. But since you, that's a secret. Actually, one line is enough. Two line probably are more than enough. But and that's why you, when I post some chart like resistance support is enough. Yeah, from education I had to draw and all, but yeah, when the chart should be simple enough, chart should be simple enough, like this one. So that's why we have three zones. So it's in green zone, so that's why okay. But my mind thinks that how come things are so easy? Somehow mind wants complicated things, because if it is too easy, then it is not real. Because somehow only if we solve complex problem, then we feel good. If the problem is easy, then probably it's, we doubt it, and there's no fun. That's how the mind works. So if I make something complicated, you'll say, wow, yeah, this is so complex. But if I put only a couple of lines, or probably, then you say, oh, this guy is doing nothing, he's not doing his job. Alright. Anyways, so the point is, it's very simple that this, it was in green zone, that's why nothing to worry that way. And now this is consolidation zone. and this is breakout level, and that's why we have this range. So maybe we can change it to 34K, I think, because of the slope. Yeah, that's it. Yeah, once this is broken about, then I think we are talking about new all-time high. There's one interim resistance, I think, that come in play, which we'll have to deal with it. And as and when it reaches there, because that's another checkpoint, and I'll anyway update on weekly calls, so you don't have to worry about that for now. Yeah, so this ends. I think we don't need the symmetry now because it's changing the weight. This is good enough. See, I'm reducing diagrams. I mean drawings. Yeah, now we can look at reference data. So let's look at DXY. It's good to see it is facing real resistance here. Last time I mentioned that this is resistance zone. We have this white box. So it's not able to break above. Right? And that's a good news. That's a good news. So the reference data are struggling, and we would like to see it going down in this direction. Okay, throughout, like starting from here all the way in 2024, maybe touches here, October 2024, and probably then it will align with October 2024, the chart that we have seen on this BLX monthly. You see, I'm trying to make sense here, which is this is like October. Yeah. So you see the trajectory of DXY there, and this is the trajectory of BTC 150K October next year. See, I don't believe in very long term, to be honest. Okay. Every week I would like to tune it, but some people really love to see what is the one price. And I'm not trying to say it's going to be 150 because it depends on the angle of the wave, to be honest. If it is sharp, then it is going to be lesser. If it is going to be long cycle, it is likely to be higher. So don't think that Mihir said it is going to be 150. I haven't said that. Okay. But if it, we can say if it goes at 36-degree angle, then in October it is likely to meet 150K. So answer answer about the price depends on the angle of the wave. And can you now everybody knows you, as I said, everybody is smart. Who who can tell the angle of the wave? Nobody can say. If somebody is really truthful, nobody can say what is going to be the angle. So that's why price. So what people who say this is the price, they assume some angle. So I am assuming this angle, and that gives me 150K on in October. But if an angle changes, then I have to change my price. So it's not set in stone. It is based on assumption, and that if the assumption changes, the price changes. Very simple. So if it goes mad and breaks above, you get 150K probably earlier, not October, earlier. And if it something major happens, let's say World War III happens, I'm not saying it should, of course not, but something bad happens. So it forget about all this. It may do something silly. You never know. So that's why every week we have to see the progress. Every week we have to see what is the angle of the wave and so on. We cannot assume things. Okay, let's go back. Oh yeah, we were looking at DXY. So it's good to see that. So we would like to see this is how it goes. And then this is like a big green channel. You might be wondering on what basis I'm saying. So I'm just thinking that this is a big giant green channel which is creating all the cycles. Each wave is creating cycles in stocks. We have seen this in past. Okay, so I'm not going to go through it again. So this is a leg down consolidation. We would like to see another leg down, lands on this channel, and that should give you a cycle. Very simple. Yeah. Nasdaq is, so in this case, this is still, I mean, even if it touches this, it's okay. I should remove all these arrows. They are useless sometimes because this is not a critical level. Only if it breaks below this level, then so this is more like a wedge, you know, this kind of a thing. So even if it like this, even if it touches, it doesn't matter much to me. It is this consolidation longer. Okay, and let's look at this is the major one, but it has hit the resistance zone. So next week is important because if this continues to go up, then forget about crypto, but everything will come under pressure, in my opinion. But we have to see. I mean, again, we cannot assume. These are reference data. Reference data are always treated as reference data. We refer to them. We don't decide based on that. That's why it's called reference data, right? They don't dictate every day, every week. What if somebody thinks, big players think that Bitcoin or crypto, which is speculative asset, but very, very strong technology based asset, and rest of the assets are inflated. And what if the money comes because of that reason? So you don't know. You had to ask billionaires, those people who have money. They're not going to tell you or me, right? They're not going to. But the price will tell us. So that's why if they think that Bitcoin or Ethereum or any major projects have a future and the money is safer there, the money could come even if the yields go up. Remember, even if the yields go up, even if the stocks go down, the money might come. So there are so many factors. That's why our TA is best. Technical analysis is best because it doesn't lie. It doesn't lie. Price doesn't lie. Price is the ultimate truth of the market, no matter what. It's an aggregated effect, net effect of all the factors in the world. Anyway, so it would be lovely to see going down, ideally. Yeah, right now it is super strong, but since it's near resistance, and you know that resistance is always a checkpoint, like support is a checkpoint here, it and then moved up, right? It was a checkpoint. Similarly, this support resistance is a checkpoint. Here there was a checkpoint, it went down. Here this was also resistance, this was a resistance, there's also resistance, but it kept on going up. So we have to see if it also breaks this one. The 5.8 is the next one and the last one. If this breaks, I think I'll just add it in. I was doing the analysis last week, in fact last 2 weeks. 5.8, I don't remember, but I think it was 5.8. This is the last one. When I say last one, what I mean is if it goes above 5.8, then that's not good from an economy point of view, because the mortgage rate and everything will just shoot up. You know that in the US it's already 8%. In Canada it's also I think 6-7%, Australia 6-7%, and so many other regions so much. So that this kind of move will push the mortgage rate to go, and that if the rest housing market feel pressure, then everything feels pressure, right? Yeah, it's a key driver. Anyways, I'm not trying to digress, and also it's beyond our scope. But it's good to know about the effect of this reference data. Let's look at dominance. The Bitcoin dominance chart has made new high. Sorry, so it shows the BTC is stronger than 7,000 plus coins. But as I always say, we have picked some coins, as you could see on my screen, they are doing much better. So if you look at Bitcoin dominance, those who are very interested in Bitcoin dominance, you think that the alts have no chance. They are wrong. This is not how you should think. You have to be very selective about what coin you select. Remember, and when you look at this list, they are actually doing better than Bitcoin at this moment. So the chart shows that the Bitcoin is dominating, but when you look at this price, you don't see the same. And it is because this chart is one against 7,000 plus coins, right? So why this chart is important? This chart is not important, to be honest. This chart is important only if it goes below 45%. Then we can say any any coin which is like any coin means any coin could go up. Even if you float on ERC token and list on Binance or something, that will also go up like that. That's how I interpret. Okay, because if you are interpreting that because it's going up, that means BTC is the only coin that matters, then you're wrong. It is not like that. So you have to look at BTC pair, and I look at it and then I basically come up with a list. That's why. So this week I have added BSV because it is it is the BSV BTC pair is looking good. That's why. So if I mean, I know that some of the coins have not beaten BTC, but the point is because they have potential. That's why I have kept, because otherwise, um, we would not have 15 coins, to be honest. So, but what I do is we have 15 coins, and then I say which one is stronger. So, which will anyway we'll cover in part 2. I don't want to jump. Uh, so this session I think is limited to BTC and some reference data that we usually look at it. So that the part 1 I'll complete here. So feel free to ask more question. In part 2 we'll cover 15 coins. Thanks.